Hey there traders, thanks for joining me for this video where I'm going to recap the trades I took in week 15. This is last week's trades from thestockbandit.com. Now, the overall market, I do review that in the index video, but essentially the indices gave up about 2% across the board. I was able to take no trades on Monday. None of the trades that I had set up actually triggered. Again, my style of trading is such that prices move through a level. That's when I take action. That's when I buy or short the stock. And until then, I really don't see any action to take. So if stocks gap through those levels, or if they never do trigger, then obviously it alters my original trading plan. And so last week I took some trades. It was not a overly busy week, but it was a productive and profitable week in terms of the trades that I took. So let me just take them one at a time. On Monday I had no trades. Tuesday, the first trade I took was in this Yelp. And I was watching this descending trend line here. Now I've drawn another one since then, this lateral trend line, as I took another trade in this stock on Friday, which I'll discuss here in a few minutes. But the first trade I took was as this stock had cleared this trend line right here on Tuesday, and I just wanted to see it push through that level, and that was getting along at the 26 level. I was stopped out pretty quickly right after I took the trade for a 1% loss. This thing ultimately did trade a little bit higher. It made almost a 2% move to its peak before it fizzled out. But it just apparently wasn't ready to go yet. I was expecting that a pretty good pullback here, and this new pullback low on Monday with a reversal to a positive finish was going to be a positive setup. So I wanted to get along through this trend line break, but it just didn't pan out for me, so I took a 1% loss there. I also took a trade in this PXP, and as we're looking at the daily chart here, you see some recent support here. I wanted to get short if that support zone was broken, which was at $41. Let me show you the intraday chart. And here's Tuesday's action. So right about here was this 41 level. So you can see once that level got cracked, caught a nice little move lower, and even this rebound right here was failed on the next attempt. We saw a incrementally lower high here. Stock rolled over again and made new lows on the session. So to its best level, this thing made a move lower of 2%, which was a nice little move. Now those who did stick around and wanted more saw a little bit of a bounce into the close, but overall it was still a nice trade. Even if they held it to the bell, they caught a nice move. So back to the daily chart here. Another trade I took on Tuesday was in this BHI, which is Baker Hughes, a stock that was kind of bouncing around near support but struggling to get free of it, and I got short as it was broken at the 40 level. That was right here on Tuesday. So back to the intraday chart here on Tuesday, 40 is right around here. And so I caught a nice little move lower. This thing ultimately bottomed out about 60 cents beneath that. So it offered a nice little move lower, an opportunity to book some partial gains. But as it bounced back up and then held a smaller, higher low here intraday, it then stabilized and lifted again. And once it pushed back through this area right here, it really was my indication that this thing had truly reversed. So I closed out the remainder of my position at break even as this thing pushed back up through the 40 level. So it ultimately was just kind of a non-event type of a trade for me. The next trade that I took was in this FBHS, which was actually a swing that I was in from a few weeks prior. I had entered this trade on the long side through this trendline break right here on this day, March 26th. So we see a really nice uptrend in the stock and some periods of rest and then some continuation. So we saw a nice surge higher here, a little shallow pullback here, kind of a bull flag type of pattern, and I got long right here. Now the initial move obviously was the best that it got for this trade. This initial pullback started to stabilize, and then we saw it break down again. And right here, as it undercut this support zone right here on Tuesday, that's when I got out of this position, because this pullback turned into a reversal once it broke this prior support. So I stopped out here for a 3.5% loss, which is a little bit disappointing, but I had given this thing some freedom of movement, and yet this initial pop was followed by a complete reversal rather than simply a pullback in an attempt to turn higher. So took a loss in that one. Now, on Wednesday, I took a few trades as well. One of them was on the short side in this PPO. I was watching this rising trend line here on the daily chart. That was broken at 35.20. I caught a real nice, hard, quick sell-off to 33.96. That was the low. That was a 3.5% move, so I was able to scale out with some decent profits there. Nice little trade. Now these sharper moves, let me just show you the intraday chart here. And this was that move that I'm referring to, and you see that support break took place right around here. Okay, and so this thing was already on the move, and then we caught a really sharp move lower. And so the sharper the moves tend to be, you should know this as a trader, the more prone to a reversal they are. So the slow and steady kind of 45-degree angle uptrends or 45-degree angle downtrends, those tend to last much longer than something that is just a violent surge higher or a very hard sell-off. These tend to be so extreme that they just promote a quick reversal. And so anytime I capture a trade in a stock that's moving in that way, I am definitely on my toes. So what I noticed here was, and this is obviously on the 3-minute chart, if you were watching these 3-minute bars, you saw a really nice 3.5% sell-off to the low right here. But what I tend to do is wait for green. If this thing is moving very sharply and I see green, that's my indication that maybe I need to be on my toes. And particularly after you see a second green bar, that should be your clue to go ahead and bail out. In this case, that would have been about the 34.70 area. So that's still like a 50-cent move. Which is still a nice trade. So hopefully, if you're a subscriber, hopefully you caught a piece of that with me. But there was a nice little trade. Also took a trade on Wednesday in this NIHD, which was a stock that had shaken me out of a swing position a couple of weeks ago. I wanted to get long through this resistance area at 1870. And it was really no pain against me. It was not a huge move, but it never went against me once it triggered a buy. So I was able to catch a decent little pop in this one. This thing really lifted to the 1902 level. That was the high, and then it backed off just a few cents, finishing at 1895. So worst case, 25-cent gain for those who held it all the way to the bell. Not a bad trade. Thursday, I took a trade in this YNDX, Yandex, which has been acting really well. Nice recent strength. Little bit of a pullback here, and then I wanted to get long if this trend line was cleared to the upside. So that took place on Thursday as the stock was able to push through 26.60, but the initial move was very minor. It only made a few cents worth of progress beyond the trigger, and then it reversed lower, stopped me out for a 27-cent loss, or 1% on that trade. And the daily chart here still does look good. We're seeing this is just kind of a little bit of a rest phase here after this breakout right here. So it's holding above prior resistance, and that's very positive, but it did not work out for me for a day trade on Thursday. Then on Friday, I took another trade in this Yelp, which was watching this lateral resistance. I'll just go ahead and extend this for you. And that was right here as the stock pushed through the $26.60 level. So the stock had spiked pretty big right into the trigger price. Let me just show you Friday's intraday chart here. Initially, we saw a little gap down. We saw kind of a hard sell-off here. And then from here, this thing just ramped straight up through this area that I was looking for it to cross. So by the time it triggered, this thing had made a considerable move over the course of just a few minutes' time. And so whenever that happens, I'll still take the trade, but what I tend to do is just go smaller in the position. I trust them less since they're obviously, like I mentioned earlier, more reversal prone. The sharper the moves, the more reversal prone they are. So given that the market was weak and this thing quickly began to fizzle out and started to give back some ground here after this sort of long tail on the intraday chart on this candle here, it really was just an indication to me that I don't need to hang around in this stock. So I did close out this trade as this thing fell back through my trigger for break even and moved on. Really just trading alongside in a stock that's been somewhat hesitant to move higher. Remember, it was hesitant on Tuesday when it tried to cross, and it showed some hesitation on Friday. And so whenever that's the case, I just want to be mindful of the price action and the character of the stock of late, and especially with a weak market on Friday, there was just no reason to hang around. The next trade I took was in this IDCC, and this was the last one I took on the week. This is a stock on the bearish end of things. We'd seen this downtrend line really dominating price over the past several weeks, so you had a real clean downtrend in effect here. We also had some short-term support, which was threatening to be broken, and that was going to take place at 33.3. So I set up this trade on Thursday night for subscribers. It did break that level on Friday. Let me just show you the intraday chart here on Friday. And really, this is kind of that level that I'm referring to, 33.3. And as that level was cracked, you can see it was never really threatened in terms of a bounce. So this thing just kind of gave a little bit of a stair-step type of move lower. Nice little trade. At its best point, this thing was down here, 32.72, I believe, is the low. So not a giant move, but even holding it into the bell offered a decent winner. That was like 38 cents if you close out here versus this 33.3 entry price. So nice little 38-cent winner. So definitely better than 1% to just kind of ride this slow sell-off. And again, the best part was it never even tried to go against me after it triggered. So all in all, a good week, a profitable week, a positive week, and on the heels of week 14 where I gave up some ground, it was nice to get back on track and make some money. So there's a look at week 15. Once again, I didn't get to take as many trades as I would have liked to have preferred, simply because my style is based on putting my edge at work over and over. I like to book those small losses. I like to offset those with larger gains. And so it's really just trading as a numbers game for me, and I write about that a lot. And last week I didn't get a very large sample size, and yet it was a nice week. So it's good to be back on track. And be sure to check out the weekend index video as well if you're not a subscriber at the site, because I do the free video there for the weekend index video. So check that out even if you're not a subscriber. And I would also love some feedback on the new video series called When the Bell Rings that I've been putting out. I've already produced 2 of those. I've got a 3rd one coming in the next couple of days, so be on watch for that. Now the week ahead should be very interesting, so be sure that you're prepared every day. If you're not already a member at thestockbandit.com, stop by the site, start your membership. We offer a free trial for first-time members, and we'd love to show you what we're all about. Thanks again for joining me for this video, and I will have more for you soon, but in the meantime, trade like a bandit.